Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, very quickly, we will start off with our trade of Anglo-American Platinum, which viewers, I think, have become well accustomed to over the last few weeks. Just maybe the point being not why you actually entered into the trade, but why you're staying in it. And I see today it actually did drop back below 500 for a brief period.
Yeah, it has dropped below, but it still seems to be fairly well bid at the lower levels. Let's quickly have a look, as you say. It's still in this trade. We've been in it now for a number of weeks, almost probably approaching 2 months now, in fact. So it's been quite a long time that we've held on to this trade. You can see the stock trending up very, very nicely there. What I'd seen was this triangle pattern, which is typically a continuation pattern in a trend, and they usually break out in the direction of that trend, which is exactly what we've seen here. It gives us a target of 515 Rand. I went in and I bought 370 CFDs for our portfolio at 450 Rand. Our initial stop loss here was 435 Rand, but remember I moved the stop loss up to 475 to take into account the fact that the trend is rising and I wanted to protect or lock in some of those profits. If you have a look at that dotted line that I've put onto the chart there, that is still very much intact. That's the rising trend. It comes in at around about 500 Rand, 495 Rand, that sort of area. So provided the stock stays above that rising trend, I'm happy to stay long of it. If it starts to break underneath that rising trend, then I'll probably look to get out of the trade. But for the time being, I'm comfortable to stay long, and I will look to bank profits if we see any movement up towards 515 Rand.
Okay. All right, Garth, so that was Anglo Platinum. What about the top 40, which is something that we highlighted last week, and it's something that you may, in fact, in a few minutes, enact a trade on?
Yes, we just might. So this is a chart of the top 40 spot index now. Measuring the top 40 index on the JSE. The J200 is the code for this index. What's quite interesting, I mean, we highlighted this last week. We said that we're pressing up against an area of resistance here, and there's support a little bit lower down here at about 42,500 on the index itself. And that some people might consider that to be a rising wedge pattern. What's quite interesting for me to note, though, is if we go back and we look at all of these previous corrections that we saw in our market, this was one that we traded in January very successfully. Notice that the market made negative divergence on the stochastic oscillator. What that means is you've got a rising high or a higher high on the price itself, and then you've got a lower high on the stochastic oscillator. And the stochastic oscillator is a momentum indicator. And what it means when you see negative divergence like that, like I've pointed out there, it means that the momentum of that upward move is slowing. And it very often precedes a pullback or change in the short-term trend. So in that example that I've shown you there, it certainly worked. We had the negative divergence, the market met up against resistance and failed, and it turned lower. The next time, what happened? Well, exactly the same thing. We had the market making a higher high, yet the stochastic oscillator was making a lower high. And what do we have? Once again, it's a similar sort of situation. We've got the market making a higher high and the stochastic oscillator again making a lower high. So it's negative divergence. Again, we've seen this happen 3 times this year on the top 40 index. The first 2 times were successful in terms of predicting a correction in the market, and we're now seeing it again. So for my money, I think that it's becoming increasingly likely that we're about to see a correction in our market now.
But if I just have to ask a stupid question at this point, and I really do. If you look at the fact that this is this channel is narrowing, does it suggest that if you do short the index at this point, you might not make as much as, say, the trade that you made in towards the end of January, because we are seemingly still in an upward trend overall?
Well, certainly we are, yes. But the technical thinking is that very often these wedge type patterns actually do break lower. I'm not going to stick my neck out too far right now and say that that'll definitely happen, but there's a probability or there's a chance that if it does start to correct, and keep in mind that we're going into a seasonally weak time of the year now. You know, in the last 4 years, every year we've seen a fairly sizable correction in the second quarter of the year. So I think first stop would be at the bottom of this wedge structure. That's at around about 42,500 on the spot index itself. But if we start breaking underneath that level, well then who knows, we could even head lower back down towards 40,000. But at this stage, that's pure speculation. I mean, I can't say whether that will or won't happen.
Sure. Now that's the spot index. You normally trade the futures index. So what does that chart look like?
All right, so the futures contract obviously will look similar, but your futures price invariably differs slightly to the spot index because there's time value built into the futures contract and dividend assumptions are subtracted and so on. So what it means is at the moment our futures index is trading higher than what the spot index would be, which is quite normal to see that. Again, here you can see a large rising wedge pattern. And what's very interesting for me, now this chart is effectively a live chart showing today's trading action. But what's quite interesting to note here is we've got what's called an evening star reversal pattern off of the top of this wedge structure. An evening star reversal pattern works as follows. You have an up day there, which is indicated by the green candle. Then you have that little, what looks like a plus sign or like a little cross. That's called a doji. And what it means is that you get equal opening and closing values on the day. Indicating that the buyers and sellers are sort of in equilibrium, as it were. And then you have a down day following that, which is indicated by that red candle over there. Now that's today's trading action, today being Tuesday.
Yeah.
So when you see those three candles together, that's what we refer to as an evening star reversal pattern.
Okay.
And it does usually, or very often, it can indicate the top of a move and the beginning of a new move lower. And given what I spoke about with the negative divergence, given the fact that we've got this resistance that we're talking about here now, given the fact that we've had this reversal pattern as well, I think the odds are increasingly likely that this is now an area where I'd like to put a short trade onto the market. But first, I want to just also look at an hourly chart of the future. That I showed you there was a daily chart. One candlestick pattern was made every day. Now what we have here is an hourly chart where the candlestick pattern is made every hour. And again, it's quite interesting to note that this thing really does appear to be rolling over now. We've got this rising trend which goes back all the way to sort of middle April or thereabouts. You can see that trend has now convincingly been broken. What's also interesting is that there was all this lateral support here at 44,150. You can see the market tested that level on numerous occasions over the last few days. And now finally today, we've seen the market breaking down underneath that area. And the likelihood is that if we see the market rally back up, that 44,150 will now probably prove to be an area of resistance. And I think it's a fair probability that if we see that throwback, that's an area to initiate a short trade. And then I would put a stop loss up above these prior highs that we saw from middle of last week.
So Garth, you talk about it rather theoretically, but would you like to do it for us now?
Well, I would actually. Funnily enough, I've got my, this is going to be a first for us on Traders Corner. We've never done this yet. I'm going to just move out of my slideshow quickly and I'm going to open my Top 40 trading platform. And here you can see the market moving, trading live at the moment. There's the trend line on the hourly Top 40 that I just showed you on that previous chart.
Yeah.
That lateral support line there is at 44,150. I said in the slides, which I put together earlier this morning, I said if we see a throwback to the underside of this resistance here at 44,150, that's the sort of area where I would look to want to initiate a short trade. Now that's exactly what the market's doing. Throughout the course of today, it's been moving back up towards where it broke down earlier this morning. That structure there looks very, very much like a bear flag type of pattern to me. And the likelihood is that this thing will probably break and continue to the downside. So given that, I'm going to now do a live trade on the show as we sit here right now and put the short trade on for our portfolio.
No fat fingers, guys.
No fat fingers, hopefully not.
We wouldn't want this to be the most costly trade in the Traders Corner portfolio history. Certainly
not on live TV either. That would be very embarrassing. So here you have the depth window. That on the left side there, those are the bids, in other words, the buyers. And on the offers here, we have the sellers. What I'm going to do is I'm going to click on the sell side. In other words, I'm willing to sell. I want to sell one contract, which is what is there. 44,067 is the current level. So I'm going to submit that, and I've traded. So we are now short one Top 40 futures contract at 44,067. What I'll do is I'll now put a stop loss in probably at about 44,600. So that's what we're talking about, about 530 points higher than where we've just enacted that trade.
Yeah.
And I'll manage that manually.
Yeah, because you don't use automatic stop losses, so you would, okay. Okay,
but
so 44,600.
Yeah, that would imply that we've then gone above that high of last week. Okay. The high of last week was 44,420. So if we start taking out that high, then I'll have to concede that I was wrong. But as it looks right now, I think that this is not a bad trade, and it's not a bad area to be initiating a trade like this.
Live short, this is quite exciting. You make it look so simple, Garth. In fact, it was rather easy.
It is rather easy.
If you get it right, that's the hard part.
That's the point. That's the point.
Garth, so, and it's not just the top 40, I know that you're looking at, it's also, and we did speak about it briefly or in the last couple of shows, the rand, whether or not a short is looming for the currency.
That's right. So if we have a look here, I mean, I did talk about this 2 or 3 weeks back. But this is a sort of a zoomed-in chart of the rand-dollar exchange rate for 2014 year-to-date. It's a daily chart that I'm showing here, so every day a candle plotting is made. What's interesting to note is that we've got this very large flag-like structure on the currency. And we've been up, we've tested it at around about 10 Rand 68 here. We've tested the top of that channel or that flag structure. What's also evident is that on the very short term here, we have another small little flag-like structure. You could argue this is perhaps a little bear flag, or might be you consider that to be a channel. Either way, we're at a very, very critical area for the currency now. If we start to break underneath this channel to the downside there, then that would imply that we'll probably see the rand strengthening back down towards 1040. However, if we start to see the rand moving out through this dotted line here, then that would imply that we've probably got an inverted head and shoulders pattern here. It would also imply that we've broken that larger channel structure, and that would probably then symbolize rand weakness going forward. So I think we're at a very, very critical juncture here. I do expect that the rand will probably break weaker. That's my preferred and more likely outlook, I think. And especially from a seasonality perspective, we often find that the rand is very weak during May. So for my money, if I'm a betting man, I think we're going to see a breakthrough 10 Rand 68 here. But until that happens, I'd rather not speculate. I'd rather wait and see. If we see a breakthrough 1068, then I will look to initiate a short trade on the rand dollar.
Okay. Garth, I was almost going to accuse you of, well, not sluggish trading, but not much action, because we're going to pull up where we are in the portfolio now, but I can't do that anymore because you've just put a trade on.
Yeah, I've covered that base, because I know we haven't done much.
But you haven't been that aggressive lately. I mean, you know, and people do tune in to see a bit of trading going on. Have you just wanted to take a sort of wait-and-see approach to what's out there?
Yeah, I mean, I've highlighted a few things that I've thought looked interesting, and we've pointed those out in the weeks gone by. But you know, I would hope that in addition to viewers tuning in to watch me trade, I would hope they also tune in to see proper trading principles. And part of that is actually sometimes you just need to be patient and not do anything.
Okay, so the portfolio is a little bit down, and that's really because of Anglo Platinum coming back a little bit.
Yeah, so we're still up 25% for the year to date. 312,000 is where we're sitting. It was Anglo Platinum that's pulled back a little bit over the last week that's caused us to lose a little bit of money this week. So that's the portfolio as it stands now. Obviously, we've just done that trade on the top 40 as well, which is not reflected on these slides because that was something I've just done right now, but we'll update that trade in next week's show.
Okay. And Garth, I know you want to mention a fairly unique presentation taking place next week.
Yes.
So just tell us a little bit about it and why it would be of interest to Traders Corner viewers.
Yes. Well, obviously, regular viewers will know that I do those option structures on the show, and they're quite complicated and so on. And a lot of people say, well, but you know, this stuff is not accessible to the retail market. Why do you even bother? The fact is there's actually a crowd in Cape Town called Applied Derivatives, and there's a chap called Nicolas Mouton, and he's making markets in options in sizes that are small enough for the average retail trader to get involved. He's now started doing a series of presentations, and I've decided, I said to him I would look to team up with him in terms of trying to promote retail interest in the options derivatives trading space.
Because it is quite sort of opaque and well, not opaque, it's just
I think
like
there's
slightly esoteric for the average retail investor.
There's a shortage of education and there's a shortage of knowledge out there. So between us, we're going to work on trying to build the knowledge base out there. He's doing a presentation on the 5th of May. That's next week, Monday, at 2 o'clock. It's at the JSE building. And it's available. It's open to everybody. It's free to attend. If you would like to attend this, please go to the JSE website, jse.co.za, and click on the events tab, and there you will find the details of this presentation. Register for it, and come along, and it would be great to see a good number of people turning out there.
Okay, great. Garth, we have to leave it there though, and obviously more details probably on your website too. So thanks as always for coming onto the program. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.